Hello and welcome. You're tuned into CNBC-TV18 Prime. Let's get cracking on a brand new edition of The Big C. I'm Manisha Gupta, back with your daily dose of commodities, currencies and cryptos. Quick look at the global markets first, and the Wall Street shut shop yesterday on a very mixed note, following the latest updates that Trump rolled out for his tariff policy. But the stock futures are in red as Street continues to make sense of the latest developments in Trump's tariff announcements. Stocks in Asia Pacific, however, mirroring that print from Wall Street. Nikkei shut shop in the green, up 0.3%. Shanghai, however, has closed in the red. Back home, the Nifty is above 25,500 kind of levels. Additionally, apart from tariffs, the developments traders will also be monitoring the release of the Federal Open Market Committee minutes from its last meeting. It would be an interesting vote to see on what the wording is and what many of those officials from Fed believe on what the interest rates should be as we go ahead into this year. Meanwhile, the crude oil prices have held firmly near those two-week highs, largely aided by emerging risks of supply disruptions and a downward revision in U.S. production forecast. Renewed Houthi attacks on the Red Sea have raised fears of supply constraints, as the sea inlet remains a key transit route for the crude shipments from West Asia to Europe and the rest of Asia as well. Additionally, the latest EIA outlook downgrades the U.S. oil production forecast for 2025, citing weaker prices that have prompted producers to scale back drilling activities. However, on prices, we were looking at signs also of swelling of U.S. crude inventories and the potential impact of renewed trade tensions. As you can see, $70 a barrel seems to be holding at this point in time. But centering our focus now on the agriculture commodities, let's take that discussion forward with my first guest on the show, Dev Gill. He's head of sugar at Marex. Dev, thank you so much for joining in. First of all, your sense on the way the crude oil prices have been moving, and has that had any impact on sugar as well? Because the bigger sugar story now is ethanol too.
Yeah, it's a good story and something that a lot of our hedge fund clients are looking at. Essentially, what we see with crude oil is it's not a direct correlating factor with the Brazilian production. That's mainly because Brazil controls the gasoline prices. What we actually saw on the previous sell-off in crude is that the Petrobras decision makers decided to actually reduce the gasoline price at the pump for consumers. So because they essentially limit the number of times basis international market volatility, we actually have seen the prices pushed lower for the parity. Now, this ethanol parity should be revised in line with what you discuss in terms of the elements that are driving prices higher and stabilizing around 70 on Brent. So that might be something in the pipeline that will drive prices and ultimately the parity, i.e. the break even for producers in Brazil when they decide whether to produce sugar or ethanol.
They've also, most of the reports in this year are suggesting that for the season 2025 and 26, we could be looking at a surplus. I mean, that's exactly what Brazil seems to be saying, the USDA report and the International Sugar Organization. Even the Zarnicaw's latest report is suggesting that we're looking at a big surplus in the next season. Have the prices factored that in?
I think the pendulum news kind of follows price in many occasions. I think there's been a huge amount of bearishness in terms of figures to rationalize a massive downshift in prices, which have largely been led by systematic trading, which we see in the CFTC report. So whether that's fundamentally led is hard to rationalize, but we, as Marex at least, believe that some of these more bearish and large surplus numbers may be a bit overrated, and those might also get adjusted when we see this swing the other way, which we've obviously seen initial signs of green shoots in the price late last week.
So Dev, as we are talking on numbers here, what is Marex's in-house sense for the season 25-26? What kind of a surplus or what numbers are you working with in sense of global supply, global demand, and of course the global inventories, carry forwards that is?
Sure, we see a small surplus of around 2 million tons, and And that feels very much embedded in the price today, if not, additional bearishness in that price that isn't necessarily, from our perspective, from our trade flows and from our balance sheet, not something that we necessarily feel is justified. So as a result, in terms of price, there is, from our perspective, a feeling that basis ethanol parity, basis a lot of the risks in Brazil with yield and with the adjustment of mix that we will believe we will see, and we have proprietary data that we kind of emboldens that view that essentially we will see the kind of change in production outlook for Brazil, continuing to fall, and the consensus numbers continue to fall June onwards.
Since we are at numbers, Dev, what's also your sense on the prices? Because we've seen multi-week lows and multi-year lows come in for the sugar prices in first half of 2025. Do you see this pressure continue for the second half of this year?
So, as we discussed earlier, the systematic trading has been rewarded by being short, and those shorts per the CFTC are over 135,000 contracts. So that is something that we cannot negate and ignore, notwithstanding the fundamental bias is coming to a point where we are at or near ethanol parity in many of the states. In some states, we're actually below the ethanol parity. So again, we feel that the justification for prices to be swinging higher, let's say 16 to 18 on the prompt, feel reasonable. If there's, of course, any major disruptions, additional to what we're, the normal adjustments, for instance, whether we had some small incidences of frost, for instance, recently, which again are hard to understand the impact of immediately. We also have some cooler weather coming in fronts right now. So these things may create additional risk factors to build in risk premium. So again, 16 to 18 seems fair. If there's a massive challenge and yield issues, which there are a few instances of localized on a localized basis, again, we might see that higher, but that's 16 to 18 is our sort of view on it for now.
Dev, how would you look at the Indian markets because of the kind of crop that we saw in 2024-25, with the expectations that 25-26 is going to be much higher? How would you look at the Indian industry really? Because when it comes to ethanol, we've seen inroads being created with maize and rice as well. And sugar and industry kind of is feeling left out with all of those others getting in.
Yeah, so essentially, India's a fascinating market for us. We, spent a lot of time on the ground in India, and really the estimates were so wide-ranging. Well, every year, but especially last year, and what a disappointment it was in terms of what we produced. But one small green shoot in the ethanol story was obviously that diversion still wasn't particularly unimpressive. Around 3 million tons. So, I think that story is definitely evolving and growing in India, which is exciting. Obviously, basis a normal monsoon and 5.2 million tons of 5.2 million hectares. We see production around 36 million tons for crop year 25-26, and we think there's capability and interest for around 4.5 million tons of that to be diverted into ethanol. So, we see the prospect of India being a contributor to the world market next year as something of possibility. Of course, it was a very tight year last year. We have seen a 1 million ton export allowance, of which we feel about 800,000 tons will be booked until expiry in September. Obviously, if that gets rolled out to December, we might see that fully subscribed to 1 million tons. But ultimately, it's not just about the allowance from the government, whether you can export, it's whether it makes sense for the price. And again, because of low world prices, it doesn't necessarily make sense for the domestic market in India to export.
Dave, interestingly, as you say, that India did allow exports of 1 million ton, and that also after a lot of pushing from the companies here, but we haven't been able to achieve that number too. Now, for the next year, it's not just about India, which is looking at a higher sugar crop. It's about Thailand, it's about Brazil as well. And is the reason we're talking about those surpluses going forward. So going ahead into the new season, and because it's a big ethanol market now, how much of Indian sugar exports do you see happen? One, and there are a lot of conversations now about ethanol being exported as well. I mean, there are thought process behind that as well. How would you look at these both?
Yeah, so if we go back to our numbers and we've indicated normal monsoon, 5.2 million tons, or 5.2 million hectares, we see a comfortable production, right, just over 36 million tons gross, 4.5 million tons of that to be in ethanol. And if we base it on that, our balance sheet for 24-25, we probably see a cushion for 1.5 million tons of sugar exports, and that to be split between whites and raws 50-50. So that's our base case. But again, it depends on a number of factors in the actual season, and obviously, we can't allow for pests and other things like that. We do think the Indian government will not rush to make a decision on exports, so it will be something for the end of this year, early next year, specifically because of what we saw in terms of last year's production being so much shorter in terms of production than any expectation, really. And we've obviously seen Pakistan, for instance, right now preparing to import, having exported. So, and that will be the second time Pakistan has done so. So there are a number of different things there that we think are interesting. Ethanol exports, absolutely on the table. I think it's part of a wider narrative for India in terms of being seen as promoting this G20 initiative, higher blend, higher production, and essentially trying to promote this around the world. So probably part of the wider mandate with trading partners around the world, as opposed to being seen as in isolation, but certainly something we think is possible in the future.
All right, it does look like a very interesting future going forward. The next season promises a lot of things and perhaps some changes in policies as well. Dave Gill, as always, thank you so much for joining in, making sense of the crude oil prices impact on sugar and ethanol, and of course the prices view and what India could see next year. Ethanol exports absolutely on table there. But with that, it's time for a short break. Up next, we will get chatting with none other than Peter McGuire of trading.com about various things commodities. Stay tuned. Welcome back. Joining us now is Peter McGuire, CEO at Trading.com. Peter, hi. Thank you so much for joining in. And overnight, the conversation clearly has been about copper. At one point in time, where the U.S. President Trump was talking in the cabinet and talked about 50% of tariff proposal on copper, we did see copper prices gain up by 17%. The closing, of course, was 10% on the higher side. We've seen an all-time high, a knee-jerk reaction, and then the prices have softened. How are you reading into now U.S. proposing and perhaps implementing it in some part this year? How would you look at the disparity, first of all, in the copper prices around the world?
Well, good afternoon, Manisha. It's been a long day. I've been up since 3 o'clock Sydney time, 3 a.m. that is. And I tell you what, because the timeline, you see something come in from President Trump and it changes the whole dynamic.
It does.
I couldn't believe it. I thought 50% is a big number. Howard Lutnick saying it's going to be, Commerce Secretary, is going to be introduced from end of July or start of August. And so there's the first part of it. The second part is naturally price. We're at all-time highs, and I feel as though I wouldn't be surprised that it has another leg up from here. Quite simply because the overall momentum, you're looking at consumer electronics, you're looking at underinvestment in that whole sector, Manisha, automobiles, home construction, data centers, everything as far as copper demand. And there's going to be, I think, a critical shortage over the next probably decade. So I'm expecting prices to edge up higher from here, and let's just see where they roll.
Oh, well, absolutely. An all-time high on the U.S. markets, Peter, but we saw a decline in Shanghai. We also saw a decline on
Yeah.
LME, by the way. How would you look at this arbitrage and disparity? Do you see that correcting anytime soon?
Oh, I do. I think so. I mean, I'd be interested to see how the LME goes tonight, Manisha. You know, that arbitrage opportunity, sure, but you know, the overall momentum, I think it's taken the market by a lot of surprise. And I'm just waiting to see opportunity. Traders will be looking at both sides naturally and seeing where they can make a dollar. So the whole issue is one, opportunity. Secondly, is it a market to trade? And as far as appetite. And thirdly, are the bulls out there thinking that there's more legs to run, or are people saying, well, maybe there's going to, that wind is going to come out of the sails? I think there's more legs to run, and
Oh, right.
I think it'll be interesting until the end of the month.
Oh my God, yes, Peter, I was awake the night as well as President Trump was talking, and as I saw those copper prices inch higher and higher and higher up to 17%. But talk to me about on where do you see the prices then by the end of this year? We would have seen tariffs perhaps come. 50% is something that the markets perhaps are factoring in right now. We'll see maybe a lot of copper being flown into, shipped into US, and that would have more inventories in US, lesser perhaps elsewhere. How are you envisioning this world?
Well, I reckon a lot of that's already happened. Naturally, they expected that from February. I think are front running it, so a lot of inventory has been built over the last matter of months. I don't think everyone was expecting 50%. It was more like 25. And so there's the first part of it. Second half of the year, let's see whether President Trump looks at increasing more metals to sit under the fabric of tariffs. So I'm thinking copper's got to be 11,500, 12,000 sometime in Q4. I just feel, just quite simply, not only from a tariff perspective, but secondly from demand and the overall shortage there. I think this is going to ramp things up. So yeah, I wouldn't be surprised to see a significant upleg.
Peter, aluminum done, steel done, copper is in conversation in sense of tariffs. Do you see that happen in other metals like zinc and
Yes.
some more then?
I do, Manisha. I
Okay.
think other industrial metals will probably certainly be under the same, situation. And I'd be very surprised if President Trump doesn't take a very immediate stance as far as precious metals, pardon me, I should say rare earths as well, quite simply because that whole situation is just one of much concern for him. And I feel as though that's going to be very fascinating, again, how that rolls into the appetite of tariffs and, of course, Howard Lutnick.
Peter, also, how would you look at the gold prices? Slightly disappointing there, 3,300 just about holding. I mean, we are still on the higher side. We are still up 27% for this year. But the way gold seems to be consolidating on, perhaps there is no interest, no money moving into it. How are you looking at the range for gold prices from here?
I still think there's plenty of upside, Manisha. We've had a little bounce as far as US dollar. I think there's been a lot of other markets that traders have been looking at in the short run. You've got equities nearly at all-time highs. We're expecting some form of rate cut over the next matter of months. I'm interested to see those FOMC minutes. I think it's been choppy. Silver's also been pretty good to the upside, so I'm happy at 3,300. It's had a big run up over the first half of the year, and maybe it's just some of that hot air is just coming out of it a little bit. And I think there's going to be plenty of momentum to the upside leading into Q4, and it's certainly over that end of the year run up.
Peter, if you were making a portfolio right now from where we stand and a lot of uncertainty really, how would you stack it within the metals as a sector? Copper, of course, seems very, very bullish, but much of that is factored into the prices already. Going forward from here, is it going to be copper, aluminum, silver, gold? How are you going to rank it really?
Well, you'd have to have silver in there. I mean, there's a critical shortage as far as silver. So there's the first part. And I think that, again, industrial demand, so that's got to be a standout. Naturally gold. Copper, yes, I think there's more upside there, and some of those other industrial metals. You'd have to look at aluminium, and I think zinc's got to be in there. So again, keep a close eye on them, because I feel as though the second half of the year is going to be more upside than downside, and the overall theme as far as infrastructure, demand picture, and so on. It's an insatiable appetite, and I'm sure that prices will spike a little bit from here.
Peter, just coming back to gold yet again, and because you're bullish onto that, and I've heard you say 3,800, 4,000 earlier as well. Are you sticking to those levels?
Absolutely, Manisha. I think, second half is going to be far more stronger than the first half. I want to see what goes on as far as rates, and we've got to think about where the US dollar is, and of course, other factors rolling into this. This tariff story hasn't gone away as yet, and I think that this is going to, again, create more opportunity for traders over the next matter of months to the upside as far as gold.
Peter, comment on the crude oil prices also, because we're trading at a 2-week highs onto this one. $70 a barrel is holding. Are you looking at further gains, or do you think 70 really is not sustainable? Because for the near term, we're looking at higher supplies.
Yeah, higher supplies. Look, Manisha, I think it was oversold. It was probably just had a little bit of a bounce. The guys are trading it and they've run it up a couple of bucks. They're probably where it's running at the moment. That overall production increases we saw from OPEC Plus, that's a really big headline number. And I feel as though as that works into the market, that glut is going to become apparent end of quarter and leading into fourth quarter. So if maybe this quarter you might have some weather outages. I think the geopolitical story is well and truly over. That's been stripped out. So the overall theme, I think, is going to be softer crude prices. It might run up another buck, but it's going to be choppy. And then the overall, I think, situation is going to be softer prices.
And how soft do you see the prices then, and what is the range, and where do you see supports come in for crude prices?
Well, it'll be in the 50s at some time, Manisha, over this by the end of the year. I think that fourth quarter will be very dynamic because the glut will come into play. OPEC Plus, there'll be a race as far as compliance, and also the other side, where do they run? Are they going to keep it at 548,000 up from 411,000, or are they going to have another increase? So there's many meetings to happen between now and the end of the year, and it seems like there's not only a race to the bottom, but a race to the top as far as production.
Oh, absolutely. Peter, also, what is your sense on the U.S. driving season? Because we haven't seen a lot of support come in from that. That being one part of it. Atlantic hurricane season is something that we start watching by this time. The other thing is about the natural gas prices, and we've seen that continue to decline as well.
Exactly. I mean, this is summer driving season, hurricane season. You've only got to put your mind back, I think the middle of the season is about the 10th or 11th of September. So it'll start to gain momentum from a weather perspective, and it's a long season. So as far as natural gas, it's been sold off. Again, we could see plenty of volatility into the market. You're always considering weather outages or geopolitics in the energy space this time of year. So if you don't see any geopolitics, and if the weather side of it is quiet, then, I think prices will probably start to slowly tumble from here.
And how would you look at many of these distillates? Because it's not just the natural gas prices. The gasoline prices have been slightly under pressure. We've seen the same thing happen to many of these distillates as well. So overall, as an energy, as a pack, do you see it getting range bound and decline by the end of this year?
Yes, I do, very much so, and I feel as though that's very much from the Trump administration also. They want to see cheaper energy prices for consumers, and that's going to be a wonderful kick along from a inflation standpoint. So the overall theme, I'm sure of it, is going to be increase production and try and get inflation down and make it more affordable at the pump. So we all understand the US situation, and that seems to be a global theme at the moment, and that's what everyone's, by the looks of it, OPEC Plus are trying to achieve higher production, and that's going to be better for consumers.
We'll wind down this conversation with one final question, and this one is on dollar index, and who seems to be holding around that 97.5 mark. What's your sense on that one for the very near term?
Yeah, I mean, I'm interested to see FOMC minutes. I think it was oversold at 96.8. It's bounced a little bit to the upside, 97.5. It might go between, 97 to 98.5. Again, it's going to be choppy. I'm interested I keep a close eye on the 10-year yield. That's running at 4.4. So there's plenty of things happening when you're looking at as far as bond rates, certainly US dollar index, and whether Jerome Powell, Fed Chair Powell, is going to see any form of rate cut this month. I think it's a very small probability. So is it going to be naturally September? How's the mood going to be? And whether President Trump starts to really turn the pressure up on Jay Powell.
Well, yes, that it doesn't end anytime soon, does it? Because of all of these tariffs, interest rate cuts, until we see that and until we see a new Fed chief as well. So I'm assuming all of these statements will just about continue. But thank you so much, Peter, for joining in. That's a very, very bullish, Peter, clearly on the copper prices, expecting all-time highs in this year. Gold as well, same as the case with silver too. It's only the crude oil prices where he's slightly bearish by the time this year ends. But with that, that's all the time that we have on Big C. It's a wrap from here, from our team. Until we meet tomorrow.